How's it going, everyone? It's Sam. We are talking about a completely new charging stock today that is very interesting. It has something called vehicle to grid technology, which is something that I really hadn't heard of before now because ChargePoint and Blink don't have it, but it is pretty game changing. So this is a company that not too many people know about. It's a much smaller market cap than ChargePoint and then Blink, and it's only moved up 20% so far because it was announced recently that they're going public. But I don't think too many people know about this company yet. So if you guys like this, please hit the like button. I really appreciate it. And if you're not already subscribed, definitely hit subscribe down there. We're on the road to 25,000 subscribers. And if you guys want to be able to trade this stock, if you want some free money in the process, definitely check out the link down below to WeBull, where you can get 4 free stocks if you deposit $100. 2 of them are worth up to $1,600. And you can use their pre and post market trading. They go from 4 a.m. Eastern time to 8 p.m. Eastern time. So you can buy and sell stocks at all hours of the day. I actually bought some. This company that I'm about to show you here in a second, I bought some at about 4 a.m. the other day, and it's up 17% today. So definitely check out the link down to WeBull. And if you want to join our Patreon group, you can join the group of investors. We have maybe 70 or 75 by the time that you see this, and 50 of which are new just yesterday. So if you guys want that, you can hear a little bit earlier on companies like LGVW that I talked to my Patreon group about yesterday, CIIC, which we're up over 100% in, and I'm not always right with these stock picks or with investing in these companies, but we have been right a lot recently. So the company that we're talking about today is NBAC, or Newborn Acquisition Corp. This is a SPAC. Again, not too many people have heard about it. It's only really moved up for 2 days here, and it's only up 21%. What they're doing is they are merging with a company called Nuvve or Nuvve. I don't really know how to pronounce this corporation. And this company has vehicle to grid technology. So if you don't know what that is, that's fine. I'm going to explain it to you here in a second. But this will give them $57.5 million in cash, and it will value the company just around $200 million. So I will give you some words of caution towards the end about this company, so make sure to stay through that because it's really important that you hear as much as possible on this company because it is a small company. But essentially, vehicle to grid technology is enabling it to link to multiple electric vehicle batteries in a virtual power plant to provide bi-directional services to the electric grid in a qualified and secured manner. This can generate revenue by selling excess power to utility companies or utilizing the saved power to reduce building energy peak consumption. This is really interesting. I mean, I had never even thought about this, but they make a very good case on their investor presentation for why this is important. Again, the company earns revenue from bidding onto energy markets and creates energy savings for its clients. Their technology is already used in some countries in Europe. It says that it's proven to be successful and lower the cost of electric vehicle ownership while supporting the integration of renewable energy for a sustainable and scalable society. Basically, what they're saying here is there is going to be such a boom in EV that it's going to be hard for the electric grid to be able to keep up. So you can see here the cost of lithium ion batteries is going to go down. The cost of owning electric vehicles is going to go down. We've seen car companies like NIO and Tesla and XPeng and CIIC. They're all exploding on the stock market. There's going to be a big push for EV, and traditional car manufacturers are also producing more vehicles. This is a charging company that can take advantage of that. So what is going to happen is there's a little bit of an issue in the electric grid right now. Right now, EV is really one directional. I mean, obviously, companies just charge the vehicles, and then there's a high volatility. They're unconnected to the grid. There's heavy uncontrolled loads, increased regulatory mandates, high cost of battery ownership. The power industry has issues too. They have high volatility. They have increasing renewables, little virtualization of assets. There's going to be an increased load from EVs. So right now, the Norwegian Electric Car Association director said this: the challenge in Norway is not that there's too little power, but too low capacity in parts of the network closest to the consumer. It is certainly challenging. So there are these densely populated areas that have a difficult time trying to supply the amount of EVs that are coming, right? So they have the power there. It's just hard to distribute it. So right now, they can make the power grid a lot more efficient using this vehicle to grid technology. You can see here the vehicle to grid technology will help the supply and demand. It will balance it out a lot better. and it can actually make these vehicles an asset. So obviously, people always talk about how vehicles are depreciating assets, how they're money holes, but this could actually cause vehicles to earn some revenue. And I'll show you how much revenue. So in Denmark, they were able to run this scenario and be able to test this out. So they were able to get about $2,750 in revenue over the year, but then they also had some operating expenses, the cost of energy, the cost of chargers, and then what was remaining was about 823 euros. So this accounts for revenue of about 180 US dollars a month in revenue. So again, you're basically producing a value, you're basically monetizing your electric vehicles. So this can help the companies make a lot more money. They say here that the difference between this company and their competitors is that they have IP, they have key patents that make it really difficult for other companies to get into this vehicle to grid technology. Again, this would value the company around $202 million, pro forma enterprise value of 132. They compare this company versus Blink and ChargePoint. You can see that they are expecting compounded annual growth rates of 312% over the next 2 or 3 years. Their enterprise value versus their 2020 revenue is about 24x versus Blink and ChargePoint, which are much higher. And I will say, this is from a few weeks ago. This is from November 9. So these numbers for Blink and ChargePoint, I believe, are much higher now than they were because both of these companies have gone up like 100% in the last week. So I think that ChargePoint is up in the 60s, and this company really hasn't moved too much. I mean, again, they've only moved 20%. Then their enterprise value versus next year's revenues, expected revenues, they are only trading at about 4.1x compared to Blink and ChargePoint. This does seem very interesting. Again, these companies always try to show their value in these presentations, obviously, so they could be off a little bit. But even if they're off to a magnitude of 2, I think it's still a very interesting opportunity. Right now, you can see that they're expecting about $5 to $6 million worth of revenue this year. And then next year, they're expecting this to about 5x. You can see 2021, about $32 million, and then the next year they're expecting about $93 million. So at a 2-year out price to sales ratio, we're talking about just about 2. So they're valued at about $200 million, about $93 million in revenue a few years out. This is really interesting to me because that is a very low value compared to some of its competitors. Now, one thing that does worry me a little bit about this company is their current ratio. So they don't have a lot of cash. You can see here $59,000 in cash. Their total current assets about $1.2 million. Their total current liabilities about $5.2 million. They definitely need this money. They do have a $4 million bridge loan right now. So I think it is a little bit risky here just because they don't have a lot of money. But the thing is, if we go through with the merger, if you're actually investing into this company, they're going to be getting a lot of money. So they will be fine from a balance sheet perspective going forward. But, this is a highly volatile company. I think this company has some definite upside potential, and I might be buying in. If you guys want to see whether I'm buying in real time and know exactly what I'm doing with my portfolio, again, you can check out the link down to Patreon. But I like this company. I don't think too many people have seen it yet or heard about it yet, and it is an interesting technology. They've been doing this for years. It was founded, I believe, in 2010. This SPAC obviously was just founded last year, but I think that they have some proof of concept already, and if they can scale up, if they can get the word out about this company, I think this is going to be really good for the stock. So let me know your thoughts on this down below. I think it could be a winner, but I could be wrong. Just like always, do your own research. Again, if you want those 4 free stocks and you want to support the channel, definitely check out the link down below to WeBull. Also, if you want to see a video on a company that is really interesting that's owned by Bill Gates now, but ARK Invest is investing into it, you can definitely check out this video here. Thank you guys, and I'll see you in this video.